Well, good morning, traders. It is the 3rd of February, 2016. Good morning to you all. This is going to be another one of my quick videos here talking about some of the trades we're doing and why we're doing them and what the setups look like and what the story is, the thesis is as to why we're doing what we're doing. This is Thomas T. Ryan and Company. We publish daily and weekly trading opportunities in a daily newsletter every day. Stop by and visit us if you like, ttryanco.com. It's $50 per month for the service, and it's no charge whatsoever if you'd like to come check us out for a 30-day free trial. All we need is an email address. We do not take credit cards for the free trial, so there's no worries about being charged or anything like that. Love to have you come check us out. This is my TC2000 screen. We're looking again, once again, at the monthly chart on the left, weekly here, daily, hourly, and 10-minute. We trade pretty much all daily and weekly in the newsletter. However, I personally day trade during the day when I'm not working on the letter, and this is what my screen looks like. It's very helpful on YouTube if you take this and blow it up to a full screen size, because I'm using a, I don't know what it is, 1900 23-inch monitor here, so it's easier if you blow it up to a full screen size. So let's take a look at one of the trades. This is currently in the letter. We're waiting for this to trigger. This is a potential day trade. This is Crown Castle International Corp. Good chance it might trigger today. It's again, it's 9 a.m. in the morning here Eastern Time on the 3rd of February. In this morning's letter, we've got it again revised. We're gonna try and catch this below the prior day's low. So there, generally what happens is when you have setups like this, overbought stocks that are, should be correct for a pullback, and we are looking at pullbacks principally in this market right now. Most of what we're doing is shorts. The market is in a downtrend. Question is, is the downtrend over? Is it going to continue? I think most of us would agree that the market is probably on its way further down, though we're going to deal with some periodic bounces, so it may get a little bumpy in here. But we had a big down day yesterday after other big up days, a lot of volatility, which is lack of conviction in the market. The market really is kind of sitting here right now after some big drop-offs, trying to figure out whether or not it's going to go lower. So we're operating under the thesis that the market is basically going to be going lower. So here's CCI, Crown Castle Corp. This stock is overbought, and it's up, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever, 10 or 11 days straight up. It has a weak MACD. We'll stretch this out a little bit. This MACD is mildly in divergence in here. It's overbought by basically every possible measure, and with a sloping down MACD. This congestion zone right in here, we're hoping is going to act as a catalyst. Obviously, there were a lot of sellers in this zone right here once it broke out and went down here. We're expecting that now that it's back in this zone and that it's in the zone in a somewhat divergent fashion here, that it's going to drop again once it sets a new daily low. Why is it going to do that? What are the other reinforcements that make this make sense? We look to the higher time frames, and again we see in the weekly time frame over here, same kind of phenomena. We have definitely a clear divergence on a higher time frame. Higher time frames have more power, so that's what we're expecting to have happen here. Is one of my emails. This higher weekly time frame right here, this is divergent. So it's particularly divergent right in here. If we zoom into this, so here we see this same pattern here showing up on the weekly, and it matches. Terrible drop off in the momentum of the stock, a downward trend here, and declining volume, although it's only Wednesday in the week right now, so this volume might catch up a little bit. The volume basically has been, the green volume has been dropping. We had some pretty significant red volume here last few weeks. So this is kind of out of alignment. We're back at a previous top, declining MACDs, declining, momentum. And now here's the real killer. This stock has been showing considerable weakness now for the better part of 2.5 years. This thing started being divergent back here on the higher monthly time frame, back in this time period right here. You could say that divergence was resolved right here, but it's overbought again, and we're in a declining long-term trend, divergent trend on the MACD. So I think longer term, our hope is that we get a pullback down into this range here, maybe 74, 75, something like that, possibly down to this pivot right about there. Maybe 78 would be about our target on this. So this is ready for a pretty good pullback. Personally, I think the letter, we're going to be happy if we can pull 3R out of this thing down to about 80. I believe is our targets for this. Let's take a look at another one here. This is another stock that is not currently in the letter, but I'm short this stock as well. The chart looks the same. We've seen this recovery from the sell-off here. It's gone all the way back up into this zone here. The volume has been declining on the pullback right here. See this dropping volume here. The stock remains hugely divergent down here. Overbought weekly, overbought here, all of these things. So we generally don't do a lot of divergences. And you look at this longer term here too, Striker, this is just, this is a huge mess here. This thing is easily ready, I think, for a pullback down to the 200-week moving average. Also, you see what looks to be potentially a triple top or a head and shoulders top forming right here. Shoulder 1, head, shoulder 2. So, this has got all the signals of a stock that is about ready to start to fold. Hopefully it comes true. Nothing is guaranteed. And these kinds of trades, as opposed to trend trading, the letter is pretty much all about trend trading. We are trading overboughts on downward trends. We're trading oversolds on upward trends. These are not trend trades. These are counter trades, which is why most of them, I trade them. I don't put them in the letter because they have to sit for a while. They're hard to pick. The payout levels are large, but the failures are large as well. So it's, I don't think they're as popular to trade. So most of these we don't put into the letter. Here's another one. International Flavors and Fragrances. I'm not currently making money, but you can see it's the same thing in this one here. We've got basically a downward trend going on here. We've got a broken pattern here on the higher time frames. Broken patterns on the higher time frames, obviously more powerful. Broken pattern here on, this thing has been kind of in a mess really since 2013. So we'll see. Here's the, if this means anything, the current pre-market bid is $80, but that's not necessarily indicative of anything for today. So at least it's not above. So that's International Flavors and Fragrances. Waiting for that to materialize as a kind of a swing trade situation. I'll be happy if we get a pullback down to the 200-day moving average, maybe 113, maybe 114, something like that. Look at one other, Honeywell. This one is starting to work out nicely. Honeywell is even stronger divergence here. But these, this is a diversified industrial, but also heavily defense-oriented company. That I hate to trade the defense stocks. They tend to be very stubborn. Great investments, but not particularly great trading stocks. So this thing had such a compelling pattern to it, and it's not completely a defense stock. Looking for Honeywell to pull back. First target here is about 95.28. Second target 85.56. And potentially something all the way down here, but doubtful. So again, the setups are the same. We see a stock which there's a lot of these out there right now. They've recovered from that big January sell-off, but back right up into this congestion zone in here. You've got a setup right here that's like, there's what should have been probably right about there, should have been the trigger point for this thing to start to fall off, and that is, I think, about where I took it. I took it right about in here somewhere. So I'm profitable in this trade right now. I would hope that it's going to go down maybe around 95 or 85. We shall see. But the setups are the same. Longer term divergence on the MACD, kind of a potential double top situation. It went right back up to the top, and now it's retracing that. You see that pattern repeated on pretty much all of the time frames. So this stock is a little bit longer term holding. This may be 2, 3, 4 weeks for me holding this stock, but we'll see. Indicator is today it's going to bounce up a little bit at the open, but we'll see. We'll see. Here's a long. I went long on ABC, AmerisourceBergen, the drug distribution company. Why am I long in ABC? Some of these drug stocks are looking very weak because of, I think, a lot of things that are going on in Congress with that guy Martin who kind of was overcharging for drugs, potential failures of Obamacare. There's some fundamental factors at work here in the pharma category. So I'm aware of that. I'm not letting it necessarily play too strongly into this, but this again, fairly compelling pattern here. Straight up, good upward trend, good upward matching trend on the MACD, oversold on a monthly basis. Potentially, this could pull back all the way down to the 50-month moving average. So I may be early on this, but we're looking for this. The reason I took it is we see this declining volume on the weekly, straight down, but declining volume, some narrowing range here. It's middle of the week, we'll see. And also oversold down here, and a divergence down here on the stochastics, the RSIs. These are all in divergence now on this trend. So we may get, the weekly trend may be incorrect, or the weekly positioning of this may be incorrect, but perhaps there's a divergence. Also, we see the MACD is turned up here, and so that's in divergence as well. So we may get at least enough of a good start. I took it right here on this green bar. It reversed back around again. Looked like it was taking off yesterday morning and then reversed and did this. So I'm sitting here, not making any money on this thing right now. But and the longs are potentially tough. May have more short days, and we're going to have long days probably right now. But for balancing out my current position of daily swing trades, I decided to take this long based on all of these chart factors here as well. I'm also short TJX, which is another favorite. All of the discount retailers, not all the discount retailers, but the other one is Ross Stores, which I'm watching on my watch list. Ross Stores also has some very negative patterns to it as well. I made a little money on it right back here, and then I got out, and good thing I did because it just has exploded again higher. But this stock also has a lot of fundamental weakness to it. You're seeing triple tops here, although it's kind of beginning to break out. You see a fundamental weakness here, which is not necessarily materializing. You see this kind of RSI is not looking very good down here. So, this should be setting up for a pullback, but we'll see. There's a lot of love in Ross Stores, and there's a lot of love in TJ Maxx stores as well. The discount retailers are the only ones that are doing well in the retail space when you look at the fundamental side of things. So, real question as to whether or not, I'm going to make much money on this. But again, this rationale on this is similar. We see this right up here at a potential double top situation with was declining volume on this. The volume has kind of materialized again that this, but we're overbought. We got a declining weekly MACD. We'd like to get this down to, pull back down into some of these averages, 68, 69, 70. So we make a couple of bucks on that. I don't have a large position in it, but I'm still confident that we will see a pullback down. Potentially, this is the pivot point target that I'm looking at, 64. Are we going to get there? We'll see. But we'll get out of this hole, if not potentially a couple of dollar profit on it back down to some of these averages. And, we're going to need another couple of down days probably to do that. Yesterday was a down day, and, it barely moved down. Big down day, and the stock barely moved down. So we'll see how that works out. Surprising day yesterday. I mean, for a market day that was down 295 points, there were a lot of winners yesterday. And this is, a lot of this I think was driven by oil going down, the oil companies taking it down, some weakness in tech, Amazon, but then Google had, great earnings. So there's some love going on there as well. So very, very mixed picture that we see going on in the market right now. Those are my, current trades. That's what I'm doing. Love to have you guys join us. Those are not in the letter. Those are just some ideas for today. If you want to put those on your watch list and think about shorting some of those if we get a decent down day today. Again, thanks for joining us. Love to have you all on board for a free trial. Come on down, check us out. ttryanco.com, free trial, no credit cards required. We'll talk to you again later.